We go. Good morning, everyone. We are live. This is Travis Witherspoon from Car to Cow Trading. Trade with Travis on YouTube. Obviously, on my live page, this is Travis Witherspoon. So hopefully, everybody's doing very well this morning as we get ready to get started. Um, I have 7:04. This is Friday. Hopefully, everybody's done had a very good week.
We go. Good morning, everyone.
Okay, there we go. Sorry. I'm gonna put myself on mute while you set up the last one. Are we good now? Testing, testing. There we go. Okay, so we are live now. Hope everybody's doing very well. And I'm getting ready to go ahead and go through the overall disclaimer and get everything else situated with that. Then we go ahead and get started. So I'm not a CTA, so I'm not going to tell you what it's about or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you'll end up making money today. So with that being said, throwing myself onto the stream. Hopefully everybody's doing very well on this Friday morning. If you have not been trading or you have not been paying attention to the market, there's a lot of stuff that has been happening. There's a lot of stuff that has not been happening that is kind of expected at this particular point in time going through. But if you're not familiar with who I am, my name is Travis Witherspoon. I'm a Forex trading specialist. I'm a Forex education specialist as well. We've been trading for the last 5 years and basically been doing this live stream pretty much each and every morning. Typically, we end up doing it over the summer right around 8:30. And now because of what I end up doing for my overall profession, which is teaching, we do it from 7 o'clock to 7:30. So we take a look at the overall chart, see if there's any other trading opportunities to be able to get into it, and then after that we go from there. And if you're not familiar with overall Forex trading, or if you want to be able to learn how to be able to do it, please take the time. Oh, screen. Please take the time to be able to hop into our 5-day Forex bootcamp class, which is going to end up going from January 25th to January 29th. Each and every day, what we're going to end up doing is breaking down each and every component that you need to know to be able to be a competent and profitable overall Forex trader. So if you're interested in being able to learn a little bit more about that information, the link is going to end up being below inside of the overall chat box. So you already look at it. The tickets, if you want to be able to get involved with that, you can be able to go to bit.ly/believe in yourself Forex. And you can be able to hop in that as well. So I'm placing in the link page as we actually go through and place that inside of the comments. So if you're interested in being able to take a look at that, I'll get a little bit more information. You can be able to go from there. Also, throughout the overall month, what we end up doing is actual live sessions to where you can be able to hop in. And it's just free live sessions to where you can be able to learn small little bits and pieces and things that's going to end up helping you out. We are going to end up doing one today. It's going to end up being right around the 3 o'clock time frame. You are free to be able to do it. It will be recorded, so if you miss it, then after that, you can be able to hop in on that as well. So with that being said, let's go ahead and take a look at the overall economic calendar. Let's see what's actually happening today. And then after that, let's go ahead and move forward. If you are live, drop in a comment, drop in a like. Thank you for being able to hop in. So we're looking at the economic calendar. Today is Friday. We're seeing what is actually happening this overall morning. What's the overall plan for today? Today is non-farm payroll day. Remember, non-farm payrolls is probably one of the most explosive days throughout the year when it comes down. What's going on, Jeremy? When it comes down to what's happening throughout the overall month, because we're trying to see how many jobs are actually created from the previous month. Now, if you look at it, this is going to be based off of December. Now, we have to believe that the US dollar is probably going to end up being pushed up because of the jobs created because of the holidays. This is going to be a very simple one when I'm looking at this. They're saying that 71,000 jobs, 700 and, not 71,000, 700,000 jobs were basically created. Based off of those 700,000 jobs that were basically created, I'm pretty sure we're going to end up hitting that number. That is a number that's going to end up easily being hit. I think that we will see the U.S. dollar start to push up. Even though I don't necessarily believe that the U.S. dollar is basically in strength, in which if you take a look at some of these charts, you'll start to say, okay, that's the opposite of what's actually happening. I'm pretty sure when you look at it again, you're probably going to see the U.S. dollar probably gain a little bit of strength when it came down to that. Will, what's going on? Thanks for the like. Hopefully you end up having a very good Christmas. So let's go ahead and hop into it. Let's see what's going on. Let's start off with the big three. Typically when we get started, every time we end up looking at it, we start off with the big three, with the U.S. dollar. We look at oil. Then after that, we look at gold. The reason why we look at that is because those translate very well or correlate very well with the overall pairs that we look at, which is the U.S. dollar, Canadian dollar, and Japanese yen. So if we look at it, market from a overall movement since the beginning of the year has been on the downslide. We're seeing lower lows and lower highs. We talked about this overall morning star that ended up happening yesterday. It was not a fulfilled morning star because the movement wasn't full. There wasn't a full bullish day yesterday, but we're starting to see that starting off this morning, the market basically started off at the highs of the day, and then after that started to push down. What does this necessarily mean? Just means that if this is going to be perceived to be a morning star for some people, then we will start to see right around 8 o'clock to 8:30 that the U.S. dollar will start to be able to have a slight push up. Now, overall, what will make the U.S. dollar bullish? Well, we'll have to have a break of this trend line, a retest, and then after that, a start to be able to have a movement toward the upside. Do we have that as of yet? No, we don't have that as of yet. So I'm still going to consider the market being bearish. We are in the push zone of this market being bearish and falling down to 11,550. So what does that mean for me as a trader? Ultimately, what I'm looking at is the U.S. dollar falling. So if I'm expecting the U.S. dollar to fall, then I want to look at higher time frames and try to see if we can catch the market at a high price. And then after that, once we catch the market at a high price, then after that, look to be able to sell from there. So seeing a little bit of consolidation, maybe that might be one of the catalysts of this market basically moving to the downside. But for right now, I am out on U.S.-based pairs for being able to trade. And I will remain to be out probably today as we end up paying attention to what happens with the U.S. dollar. So U.S. dollar pairs, I am not necessarily looking at. Okay, let's go to U.S. oil. Oil, we talked about how this market was going to end up hitting 50. Once it hit 50, it was going to end up exploding up and going up to 61. And just like what we ended up talking about, the market ended up hitting $50. The market ended up retracing. And then after that, the market ended up exploding up. This one, once again, very simple, very plain, and very plain once you start to look at how the movement was starting to happen. The D extension has been completed for the daily, but it has not been completed for the weekly. As my son comes in and brings in snickerdoodles. everyone give me one quick second because they haven't ate breakfast. I'm just gonna give an apple or something like that. It'll be real quick. One quick second. Let's go be dogs. Come on. Stand up, baby. Stand up. Come on, Mouse. Come on. Mouse. Come on. Say hey. There we go. Good job. Come on. Okay, sorry about that. So the overall expectations was that if you look at oil, the market hits the D extension, the market has to start retracing. Well, we got to go back to what ended up happening in March. March, the market ended up going to zero. Now we're basically back at the overall support level where the market was basically at going into 2019 all the way into 2020. So if we're looking at where this market is going to end up going over the course of this next year and basically recovering, we have to expect that this market is going to end up pushing up towards this. Expect that, then that means that when we're looking at overall trades, the trades that you should be looking at should be buying, essentially. And that's the only thing that we should be looking at for us being able to get in. If we're not looking at buying when it comes down to this, doesn't make any sense to be able to trade at this particular point. And that's being blatantly honest when it comes down to everything. So we go to the 2 hour. Let's go back to the weekly. Let's talk about where the market should go. You look at the D extension. This is darn near perfect. You can see that the market is in a push zone. You can see that the market is in the sell zone for this, which means that it should recover just a little bit. Once we break inside of this zone, this is a breakout. We'll see the retest a little bit going into the next couple weeks. And then after that, we should see the market start to push up towards the 6730 towards that overall area. Once again, that's very fundamental when it comes down to that overall movement. That's nothing that we did not expect. Now, if we're looking at what's going to end up happening based off of the 2 hour, the question is, should we be getting in at this particular point in time? The answer is no. What I would like to do is be able to allow this market to be able to have this big little push to the upside, retest right around this overall area, use this as an actual support, and then after that start to look at being able to buy towards the top side. Once that happens, then after that we have a trade. Until then, I'm not interested in being able to do anything on this particular one. But it's good that for the people that end up making that trade yesterday and end up making money off of it, it's good to see how when a plan comes together, it truly works out and goes from there. Now, speaking of a plan and speaking of being able to get inside of an overall trading pair, this is textbook for what we end up talking about with gold. And I want to make sure that we end up talking about this again. Remember, we said that the expectation was that once this market end up getting out of this overall, zone, for us breaking this channel, once it broke out, it had the retest. Where are we at right now? We're basically at the retest area. So is everything kind of aligned for us to be able to trade right now at this particular point? The answer actually is no, because we're actually in the sell zone. If we're looking at this from a stochastic perspective, if you want to wait a couple more days to be able to get into it, then you possibly could when it comes down to that point. Me personally, if I'm looking at this overall position, the next thing that I will be waiting for, if I'm manually trading this, would be, is there a counter trend line break that we can be able to get into for us being able to go from there? Okay, because the market could fall back inside of this overall area later on today, and then after that start to push up. I do like what we end up seeing. I do like the retest. If we're trading this based off of the retest, then I will already be in. The question is now, if we go to the 2 hour and take a look at this overall position, do we have a counter trend line break right now? The answer is no. Are we in the buy zone? The answer is yes. Did the market touch right at this particular point? That's a beautiful move that we ended up talking about before. So me personally, I am interested in being able to trade on this overall pair. I think looking at it from a from a long-term perspective, I think that getting value on this will end up basically putting us into a very good position long-term. So I am interested in being able to trade this one and kind of seeing how the market is going to end up going. I'm actually going to turn my EA on at this particular point in time and see if we can be able to get some more value off of this number. So my EA is actually turned on right now at this particular point because I'm interested in being able to trade right now when it comes down to that. Now, looking at non-farm payroll, what does that mean? Are we looking at this market going to continue to fall? It may very well do that. I'm not necessarily judging that it wouldn't, but we said that we wasn't going to chase this market when it ended up pushing up. We had to see this market basically do a retest, and right now we're at that retest. And because we do have that retest, now we have to focus in on how this market is going to end up reacting toward the downside on this movement. All right. Next thing that we're going to look at is what's happening with silver. If you're not in right now, once again, what would you do? Right now, we have the breakout. We have the retest that is happening right now. I will wait for a counter trend line break of this market breaking to the upside. Once that happens, you're free and clear to be able to get in with whatever trading style that you end up doing. Taking a look at silver real quick before we get into the overall currency strength market. We can see, same deal. Market falls from that retest. We did not want to jump in at a high price. It really didn't make sense to be able to jump in at a high price. But right now, what are we looking for? We're looking for a counter trend line break to the downside. Okay, so same deal. We have this movement. Once we end up having a counter trend line break to the upside, we may end up getting in. Anywhere below the $26 area, I think is a very good price to be able to get in for us trying to find value. And that's me just being very honest on how I'm evaluating this. Weekly, we're still on that push up. We expect for the market to be able to go up to $39 towards a overall push. We're basically somewhat in the sell zone, or we're getting close to the sell zone when it comes down to silver from that overall movement. But I think that just like kind of like with Bitcoin and everything else like that, this is going to end up being one of those movers throughout the overall early months that I think that you can be able to capitalize on. Where's the market at on this one? It's at 67%. Do I expect the market to be able to fall all the way down to $25? That's something to be able to pay attention to. I'm not as eager to be able to jump into silver as of yet compared to gold. But silver typically makes the first move. So we have to be able to pay attention to this. If this market falls into the buy zone, then I'm definitely interested in being able to get in for the overall movement at this particular point. All right, so that's where we are. Let's go to the currency strip chart. Let's see where we are for its overall direction today. If we look at what's happening with the market, we can see that nothing is over 40, but we do have a consistent loser right now for the overall portion of today. We see that the Eurozone is very weak when it comes down to this movement. We see that the pound is very strong. We see that the pound was somewhat strong at the beginning portion of this morning, going into the early portions of the London session. All right, so what does that mean? It means that everyone is kind of waiting to see what's happening with the non-farm payroll, and it means that the market did not make a decision earlier today. So I think that we're probably going to end up seeing less movement. We're probably going to end up seeing less movement of any pair aside from the U.S. and Japanese yen probably a little bit later on today when it comes down to non-farm payroll. Okay, so look at that. The question is, let's start off with the U.S. yen. We talked about how the U.S. yen was in this overall wedge. We see that it's basically now broken out of this wedge and it's at the top side of this wedge right now. Any type of good number when it comes down to this overall movement could possibly make this market move to the upside. However, I'm still kind of interested in being able to sell instead of actually being able to buy. So I'm actually going to stay away from this overall pair. Even if it does break out, I don't think it's necessarily ready to be able to fully break out of this overall movement as of yet. There will be some areas where I would kind of pay attention to and see what will happen for selling, which will end up being right around right here, and possibly a little bit right here for its overall high positions. We can see anything at 105.30. We can see anything right around this 104 area. There'll be a couple areas where I would love to be able to trade for selling. If you're at a point to where you're looking at being able to buy, and you want to buy this breakout because the market is in the buy zone, just know that you'll probably be buying up to these overall zone areas right here. So if you're interested in being able to get into those pairs, that's great. Me personally, not necessarily interested as of yet. We'll wait on that. Euro, United States dollar. Take a look at what's happening with that pair. You should see that this market should break out of this channel, and that's exactly what we see. Market has moved to the upside. We talked about how it was breaking to the downside off of this channel. We have a breakout right here. Not necessarily looking for a retest. We're probably going to end up seeing a movement. We're probably going to end up seeing movement later on today with the non-farm payroll. I do believe that the numbers are going to end up being good for the U.S. For its overall jobs, which means that we may end up seeing a little bit of a spark to the downside for this overall movement. That's just my opinion when it comes down to that. We see right now that we're at the start of being able we have this long doji candlestick, which means that there should be a change in overall movement to the upside, meaning that before the market actually has non-farm payroll, we should see that the market will start to move up, which will give you a high price to be able to try to see if you can be able to sell it down to the downside. Now, the question is, are you going to take it? Me personally, right now, I would wait to kind of see what's going to end up happening. I am interested to see what's going to happen in about an hour, but I won't make a trade until 15 minutes after the decision has been made on what's happening with the overall numbers. But this could be a good scalping pair back down to 122. We see that 122 has been somewhat of a support. It starts to push up, and let's say it gets up to 122.80, then I would sell it down to 122 and try to see if you can get some numbers off of that. Other than that, I'm still kind of staying away from it at this particular point in time. Pound United States dollar. Pound United States dollar has broken a counter trend line break to the upside. Finally, based off of that overall movement, as we talked about earlier today. We see that we have major support that has been happening. We see that the movement should start working up to the upside. I think that the better trade would be to wait until probably Sunday to be able to make a trade off of this one instead of trying to get in today. Currently, right now, if we look at that, that would be your outer trend line if we cut that wick. And we have not completely broken out of this overall upside zone as of yet. So I'm still kind of waiting to be able to get in on that overall pair. Australian dollar, United States dollar. We see after that big dip that ended up happening, we see that the market basically recovered. Ultimately, the market is expected to go to 83 towards a overall upside movement. Currently, right now, we can see that this market is in the sell zone, which means that you're trying to get a little bit of a scalp. You possibly could, but once again, going back to what I talked about with the U.S. dollar index, I'm not necessarily paying attention to this market basically falling. I'm looking for overall upside movement. So if it could fall, I'll be kind of happy to be able to see what happens with that. Okay. I'm only going to focus in on one indice today, and that's going to be US 30, and kind of talk about the overall position that I end up taking and what ended up happening. Remember, I told you I ended up getting stopped out of this overall move right when the market was at 30.77. Right when the market was at 30. I'm sorry, 30,100. Because I ended up moving my stop loss. I ended up moving my stop loss too early, and this is kind of proven as a lesson on, once again, you have to be a little bit more patient with your overall stop loss, especially with a pair that moves this fast. I ended up getting in when once we end up having that impulse move to the downside. I ended up getting in off of this candlestick right here after it proved that it was ready to go at 30.77. Once the market ended up moving up, it ended up retracing again, and even though Owanda is not necessarily my broker, it ended up hitting towards 30,098, stopping me out. It happens, it sucks, but that was a $2,000 move that could have happened for being able to trade to the upside. For the people that actually end up staying in this overall move, I caught it when the market was basically at point of control at 30,385. Then quite frankly, you would have made money off of this movement from the market moving to the upside. So what does this mean? Ultimately, the market is expected to go to 32,000. If you are in a position, or if you have been in a position, be patient. Allow the market to be able to move. It's in the push zone. Once again, anytime that the market is in the push zone, expect for the market to be able to move in that one-sided direction. So the market is expected to go up to 32,000, 32,520. If we get a little bit of a sell, I can possibly be able to get in with the market basically falling. Then I'll be interested in being able to get in or being able to buy. I expect that if the market does fall, it's probably going to fall somewhere around here. And then after that, try to go from there. I don't think that it's going to fall 1,100 points. I just don't believe that. But I do think that it will fall. If it does fall, then after that, I will try to be able to get in. But from right now, there's nothing I can be able to do from that overall pair. I'm not chasing that market. All right. So other than that, if you like what we end up doing, you want to be able to learn a little bit more about how to be able to trade. Once again, take the time to be able to hop inside of our 5-day Forex bootcamp. Want to be able to do that this January 25th to January 29th. Remember, it's a 5-day course. It's an hour each session. And what you end up learning is basically the base of overall Forex trading and being able to have an opportunity to hop inside of our masterclass. Each day is structured to where you end up learning everything that you need to know when it comes down to overall trading and being able to get into a better position when it comes down to figuring out what you want to be able to do. So, like always, please make sure that you end up taking the time to be able to like some of the actual business pages and everything else up there. Please make sure that you subscribe to what we end up doing on Carter Kyle Trading on Facebook. Make sure that you end up liking what we end up doing on Instagram, and also subscribe on Trade with Travis. We don't necessarily have that many subscribers. We are a growing community on being able to go from there. And every follow, every like, every comment is very important to our overall movement and go up. Like always, plan your trade your plan. I see each and every one of y'all on Monday. Y'all have a good one. Take it easy.